Welcome to The Explainer. Today, we're digging into a company that is, well, it's a complete puzzle. The electric vehicle maker NIO. That's NIO. Its sales are absolutely soaring, but its stock is struggling. Its story really captures all the excitement and all the anxiety of the entire EV market right now.
So let's just cut right to the chase, shall we? This is the central question on pretty much every investor's mind when it comes to NIO. Are we looking at a rocket ship that's about to take off, or is this just a really high-stakes gamble with some serious risks hiding under the surface?
And this slide, wow, this just lays out the contradiction perfectly. On one side, you have this incredible 44% sales growth in just a single quarter. That is huge. But then, on the other side, the stock price has actually dropped 14% in the last month. So how can both of those things be true at the same time? That's the puzzle we're going to try and solve today.
To figure this out, let's start with the good news. This is the bull case. What exactly is the engine driving all this growth? And why are some analysts getting so optimistic about where NIO is headed?
Okay, so a major spark for all the recent optimism was this upgrade from Macquarie. Now, moving a stock from neutral to outperform, that's a really powerful vote of confidence from a big firm. It signals they see some real upside coming.
And here's the number that really powered that upgrade: 44%. That is a staggering increase in vehicle sales, again, in a single quarter. And it was fueled by what sources are calling healthy demand for their newest models.
And Macquarie isn't just looking at what happened last quarter. They've also revised their predictions for the future. And they've revised them upwards. They're now forecasting that NIO will sell over 450,000 vehicles by the year 2026.
Now this right here, this is a crucial piece of the puzzle. Over 80% of customers are choosing NIO's innovative battery-as-a-service model. So what that does is it separates the cost of the battery from the car itself, which makes the sticker price lower and, importantly, it locks customers into NIO's ecosystem for the long haul.
But that incredible growth, it's really only half the story. Now we have to look at the bear case, because behind those impressive sales numbers, NIO is facing some significant financial hurdles that are causing some major concern. You have to ask, right? With sales figures that good, what are the underlying issues? Why is the market hesitating when the growth story, on the surface at least, seems so compelling?
Well, this stark number is a big part of the story: a negative 33% operating margin. That basically means that for every dollar of revenue they bring in, they're spending about $1.33 just on operations. It shows that even with high sales, they are nowhere close to being profitable.
And it's not just the operating margin. The company is dealing with these persistent net losses, and its gross margin is under 10%. And all of this is happening while they're facing absolutely fierce competition in what has become an incredibly crowded EV market.
This table really highlights just how divided the experts are. You've got JP Morgan with an $8 price target, but then you've got Barclays way down at $4. This massive range shows a fundamental lack of agreement on what NIO is actually worth and what its future is going to look like.
So, how does NIO plan to solve this puzzle? How do they turn all of that growth into actual profit? It all comes down to their big bet: the ecosystem.
See, NIO's strategy isn't just to sell you a car. It's to pull you into their entire network of services that's built around that car. The bet is that these unique features, like battery swapping and their own software, won't just create long-term value, but will make it really difficult for customers to ever switch to a competitor.
And this strategy, it really breaks down into 3 clear steps. First, they're making an aggressive expansion into the European market. Second, they're enhancing that unique battery swap network. And third, they're developing their own advanced driver assistance software to create that long-term value. Okay, let's pull all of this together. We've seen the exciting growth, we've seen the scary financials. So what does this all mean for NIO, and really for anyone watching the EV industry?
So, the crucial point here is that NIO is just a classic high-growth, high-risk scenario. The bull case is clear. You've got explosive sales, some strong analyst upgrades, and this high adoption of their battery service. But the bear case is just as compelling: deep, persistent financial losses and a stock price that reflects some major market anxiety.
And this leaves us with the billion-dollar question, doesn't it? We know NIO is innovative, but in a brutal market that's full of giants, is a clever ecosystem enough to build a profitable future? Or is it just a very expensive, very compelling gamble? That remains the puzzle at the very heart of the NIO story.